Thank you for joining us.
That's right, pleasure. So thanks very much, Rod. So I think, as you said, I'll just, there's a few things that you asked me to touch on. So I'll touch on those first and then we can go to questions. So I think the first thing is, I guess, the whole context of COVID and getting to net zero. And I think that there is, what we are seeing at the moment is a growing recognition globally of the need to couple basically the need for recovery from COVID as well as decarbonise the economy. And particularly in Europe, Canada, many Latin America, places like Korea, there's a real focus on the ability to basically both grow the economy and decarbonise at the same time. It's probably, the focus is probably less so in Australia and the US, but globally we are seeing that. And interestingly, in Canada, what the government said was that if anybody would like a bailout as a result of COVID, if you're a corporate that generated above a certain level, you had to demonstrate that you were implementing climate risk assessment under TCFD before you could actually get that COVID recovery. So I think the very important point is that there is this global recognition now that climate change, sorry, as in the cartoon which Rod put up, which is that while COVID is clearly a short-term economic problem, climate change is a long-term systemic issue which will destroy the economy if we don't deal with it. So I think that's very important. The second thing is that in sort of talking about how to respond to decarbonisation of the economy, one of the challenges that we do face is that on one side of the equation, you have the proponents of what I'd call the old economy, the fossil fuel economy, who often say we have projects that are ready to go, they're ready to be funded, they're gas pipelines, they're the like. And so therefore, if the government wants to quickly invest in the economy and create jobs, those sorts of projects are available. On the other side, we have a lot of excellent work around from people like the Climate Works, Beyond Net Zero Emissions, etc. But it tends to be at a fairly high level talking about the principles of decarbonisation. And the challenge we face is that we really have to make sure that those organisations come forward with concrete proposals that can be invested in. Because one of the challenges that we often talk about green steel and we talk about green hydrogen and we talk about the ability to do a lot more renewables, but unless you've actually got the projects to invest in, it doesn't move at the rate that we want it to. So a lot of the focus has to be drilling down beyond the high level narrative into what are the very specific investments. The second area Rod asked me to touch on was the role of finance. And this comes into the first point, which is that at the moment, there is an enormous amount of capital in the system that is looking to invest in a decarbonised economy. So as banks and pension funds institutions increasingly withdraw money from the fossil fuel sector and increasingly are looking to get out of those areas and decarbonise, they need things to invest in. So again, this comes back to this concept of the need to invest in ideas. So when you typically talk about institutional capital, pension funds, sovereign wealth funds, as a general rule, they take your pensions and they have a legal obligation to invest that wisely and not to put it into risky things. So, you know, for them to get you the rate of return that you need, they're probably more likely to invest in a toll road or an airport as opposed to a rainforest, because that's going to give them a rate of return that can pay your pension, whereas carbon credits will not pay your pension. So as a general rule, a lot of this capital is constrained. Secondly, the other large bucket of money that often people rely on to look at more adventurous investing, which is philanthropy, is itself not very adventurous. So on the whole, most philanthropy wants to fund NGOs and people to write reports. It doesn't necessarily fund entrepreneurs with really good ideas that could change the world. And so what we need to do is make sure that the finance that is around, just like in the medical area, with medical R&D, is actually prepared to do what I would call decarbonisation R&D. So that the money that's out there is prepared to invest in people, really good engineers, really good scientists, to come up with really good nation-building ideas that can actually put the economy on a path to net zero emissions. Finance is also critical because it's often a lot easier to convince banks and other institutions than it is to convince companies to actually change their behaviour. So there's been great success in influencing banks and financial institutions to actually not invest in assets that will be stranded because quite simply they'll lose money. And so there's been a very big push globally, which has, I guess, gained significant momentum through the Bank of England's Task Force for Climate Financial Disclosure, where companies are required to disclose the risks of climate change in their financial disclosures. And that has had a rippling influence around the world that is only getting stronger. The pressure on those financiers then sees that playing out with pressure on companies, where those large funds say, we're not going to invest in companies anymore. So every day you get another example of a sovereign wealth fund saying, we're not going to invest in fossil fuels. One of our last week, Hester, one of the largest Australian funds, said we're no longer investing in fossil fuels, and we're going to make sure that our fund is Paris aligned towards net zero emissions. So in this sense, finance has a really important role to play. And interestingly, in Australia, we don't have really a strong history of venture capital. The government has organisations like ARENA and CSIRO that fund research and development, but on the whole, that is a fairly small amount of money. Unlike other countries like America, where we have a much greater propensity to invest in early stage investments and ideas, that is what we need to do. Having said that, organisations like ARENA, which I chair, have for many years funded solar technology at the University of New South Wales, and many people don't appreciate this, but Australia has the leading solar technology in the world, pretty much thanks to the fantastic work of the team at UNSW in Sydney. So that's that's a really positive thing, which shows you that when you get universities to work with finance, we can do incredible things. I think then also that comes to the issue of then, I guess, how do we actually drive decarbonisation in addition to finance? And I think there's always the debate between what are, I guess, incentives and what are basically, or as people refer to it, carrots and sticks. So in Australia, we have a range of incentive programs, tax deductions, R&D credits. We have grants such as through ARENA, soft loans such as through the Clean Energy Finance Corporation, all of which are designed to facilitate investments in the clean energy space. But the flip side of that, and as Rod said at the outset, is that the other way to do this is to actually have governments play a more direct role in the economy. And there are two really significant ways that can be done. So the first actually, which is actually not that difficult, is through providing significant procurement. So the New South Wales government has just announced that they want to have 8,000, so that they want to make their 8,000 buses electric. So all of a sudden that creates a momentum shift that you're moving all of your public transport sector from into a basically more climate-friendly sector. And as more companies and more governments do that, you can transform an entire economy. So the ACT government has been highly successful in doing that, and they've basically become 100% renewable through going through a tender process to make sure that all their power is from a renewable source, and also in their transport sector. So government procurement is very important. Secondly, government policy is very important. So as you've seen in Europe, you've seen many of the European governments, say, particularly in Norway, set a target for electric vehicles and say by 2027, for example, you will no longer be able to buy combustion vehicles in our economy, and so the entire economy starts shifting towards electric vehicles. And those sort of policies do shift the entire way an economy works. Now, in Australia, the debate to compare that around electric vehicles has been the government's not keen on setting a policy. There's a lot of debate about, well, how do you replace the fuel tax? But ultimately, that means we will be sort of left behind in that transition. What's interesting is that all of the German automakers now have transformed their entire platforms to be electric. So you won't find all of the big companies have done that. It took them a bit longer to get there than others, but it is a significant shift. So the product itself, the entire production of cars will also shift in that direction. So the second thing is policy. And just to show you how significant that also is, there is one state in Australia that has a climate change act, which is Victoria. And that act basically says that Victoria must hit net zero emissions by 2050. Every 5 years, they have to develop a decarbonisation plan for every sector of the economy, whether it's health, agriculture, transport, energy, all those sectors. It's really important to do that. And so the government is therefore forced to develop a plan to decarbonise the economy, which means that things move and things happen, which is quite different to states that simply have a plan to do that, and then the government has to deal with all the internal politics about how to move that. But what's interesting is that every Australian state, now has a target of moving to net zero by 2050. So I think that that's particularly important. So in some ways, as long as the states go very fast, putting effort into state governments is almost as important as putting effort into the federal government. And then the final, I guess, tool which we often talk about, which Rod mentioned at the start, is carbon pricing. So when we talk about carbon pricing, we're basically talking about placing some sort of economic value, price or tax on polluting CO2. And at the moment, we do that for most other environmental damage. If you, for example, in New South Wales, want to put certain pollutants into the environment, you have to get a license. That license, in some of those pollutants, taxes you if you go over a certain limit, and it's fairly standard. As of today, 61 countries around the world have either an emissions trading scheme or a carbon tax. So to say that, when you hear some Australian politicians say, well, that's, no one has a carbon tax, it just simply isn't true. So 61 states and countries, and the highest value of, I think, the current highest carbon tax is $75 a tonne. Secondly, most companies that in Australia actually incorporate a carbon price into their investments in any event. So when people push back on carbon pricing, the truth is, at a default level, they're also doing that. I think, and so what a carbon price does is, if you put a carbon price on a company saying for every tonne of CO2 you emit, you have to pay a tax or a price, it creates an incentive to reduce emissions. And that tool has been very successful in many other areas in regulating environmental outcomes. And I think the thing to remember there is that carbon pricing, ultimately, you would like the carbon price over its history to run down to zero, because basically everyone has stopped emitting through other alternatives, so you actually don't need a carbon price. So as a tool, the ultimate objective is to really allow it to run the economy. And just when you think of the Australian situation, and we just go through what's actually happened in Australia, because I think this is quite important. Back in in the early 2000s, Premier Bob Carr in New South Wales introduced an emissions trading scheme. And we had a very active emissions trading scheme that required the electricity retailers to reduce their emissions, and they could purchase credits from forest operations and from installing energy efficient light bulb. That law drove a significant amount of investment into sequestration and a significant amount of investment into energy efficiency, and was highly successful. But while that was operating, there was a lot of debate about what would happen federally. And when John Howard ultimately introduced his emissions trading scheme back in I think 2007, what happened was then we saw the New South Wales scheme get repealed because that was going to come forward. Ultimately, that didn't come forward. And then what happened was all of the state governments got together on the east coast of Australia to develop a multi-state emissions trading scheme. And that scheme was really designed in the failure of the federal government to put into place a state-based scheme modelled on the national electricity market. And they got quite a way down the path of doing that. But then what happened was the federal government under Labor moved forward with a carbon price reduction scheme, the CPRS, under Kevin Rudd. And that was the famous scheme which almost got agreed with Turnbull, and ultimately at the last minute got taken away. And then once Rudd went, Gillard came in and introduced a Clean Energy Act. And so for 2 years, we had a very robust, workable emissions trading scheme in Australia, which was highly effective. Emissions started to go down, industry worked with it, and it was a very, very good scheme, only for Tony Abbott to come in and then get rid of it. So I guess the reason I'm sort of raising this issue is because, number one, carbon pricing is very familiar around the world. It's operating in many countries around the world. and there has been a long history of it in Australia, and when it was implemented, it was highly successful in reducing emissions. And the politics have sort of taken over since then, which we can come back to. But I think the really important thing is that wherever it has been put in place, it has an immediate impact of reducing emissions, provided that it's designed properly. Finally, the thing which people do not realise is that in Australia at the moment, we do actually have we do actually have a law called the Safeguard Mechanism, which imposes a cap and trade on major industry to reduce emissions, and it is in fact a baseline and credit carbon pricing scheme. It's just that the levels on companies are placed so high that ultimately it's not very effective. So it takes an approach where the whole of the energy sector is governed as a bubble, and only if the whole of the sector goes above that bubble would they need to buy credits, and then other large industrials like your Woodsides, BHPs, etc., who are covered by that scheme, if they go above a certain level, have to actually purchase offsets. And then sitting alongside that is a very large federal government offset fund, whereby the government has what was previously called the Emissions Reduction Fund and is now called the Climate Solutions Fund, where the government goes into the economy and buys carbon credits from people who do projects like planting trees, for example. So what the Carbon Pricing Coalition does is the Carbon Pricing, Leadership Coalition comes out of the World Bank. The World Bank back in 2005, 2010 onwards, developed a whole suite of carbon funds, which we were very involved in. And those funds were established to go and buy carbon on the international market as part of the trading of carbon, which linked into the European Emissions Trading Scheme, which continues to operate today. Off the back of that, the World Bank set up the CPLC really to raise significant awareness of carbon trading and what was going on, and to also to basically help countries actually develop their own emissions trading schemes through capacity building with governments. So a lot of the work of the World Bank and the CPLC has actually been assisting governments to establish emissions trading schemes and working with them on doing so. And the truth is the same issues come up in every country. They're no different. Who will be covered? What will the nature of the unit be? What will the targets be? Will there be any compensation? How will the revenue that's been raised be used? They're all common issues that come up time and time again. So I think the really important thing from an Australian perspective is to continue to articulate the fact that pricing carbon is really nothing that we don't do with other environmental impacts. Number two, it's happening all around the world. And number three, we actually have a carbon pricing scheme in place in Australia. It just needs to be, I guess, in effect, ramped up much further than it is. Because I think that in truth, the ability to rework that in the short term is going to be too difficult, but it is there at the moment. So I think that gives you a little bit, I hope, of a high level, just some observations from me, and very happy to take questions.